Hey, Alpha fam, welcome back to another episode of Alpha Commission. I just want to thank you all for subscribing and being fans. Guys, your likes really do help this channel grow. Of course, if we take a look at the crypto bubbles, you can see that it is just a mixed day. And so, what do we have coming up on the financial calendar there? We do have the CPI data, which is basically another measure of inflation on April 12th, this coming Wednesday. And that could be something that could cause markets to just take a pause to wait for that data to come in, or potentially it could cause waves should it be an unexpected number come Wednesday. Now, we are looking for these numbers to be approximately zero point 0.4, zero point 0.5, 6%, 5.5%, respectively. And should those numbers be higher than expected, that would be bad for markets. Should it be lower than expected, then that would be good for markets. So those are the numbers that you're going to be looking for. We can talk about that more on Wednesday. Jumping straight to the charts, let's take a look at the 4 hour because you can see these indecision wedges, that have been being put on Bitcoin. Now, typically speaking, these things break down about 70 to 80% into the wedge, and that's currently where we are in the current formation here on the 4 hour. Now, when I say break down, that's what we did last time, but it is also possible to break up, and so we are looking for some type of volatility movement, and the Bollinger Bands are getting quite tight now, so we are seeing that volatility is very low, and that does suggest that we could have a pop up at any time, and it could just be completely random based upon market movements here. Now, currently, we are above the 4 hour Bollinger Band midline there, so that would suggest perhaps a pop up. However, we really would have to take a look at our EMAs to get a clear picture. And simply speaking, we've been going sideways so much that your momentum oscillators aren't going to be that much help on the smaller time frames here. And so you can see they're just all crowded into each other, and that just doesn't give you a direction, right? So the directional bias has to come through another method. And the method that I've devised over here, of course, at the Alpha Commission is to, set basically certain level standards. So if we zoom in, we can see that my volatility pivot is here at 27,970. Should we close above that and hold on to the volatility pivot in the next couple 4 hour sessions, then our bias will be to the upside. Now we're going to start losing momentum underneath 27,955, and but bears won't gain control until under 27,700. Bulls are not in control right now. This is a very neutrally oriented chart at the current moment. Bulls will regain control above 28,415. And these levels here obviously are aligning with the top of the wedge and the bottom of the wedge. So that's very convenient. It just shows how this formation works. Now, last night I was looking for a potential inverted head and shoulders off of this formation right here. I can show you that just briefly, where we had the possibility of putting in something like this, right? And then that would have had a measured move to the upside that could have potentially put bulls into control. Now, as you can see, we never did hold on to that right channel. And so while the setup was there, potentially, we didn't have any validation of that. So that became an invalid move. And should we break down, if this should be some type of a failed formation, then the measured move would actually be to the downside. So we will take a look to see if we can hold above that $28,000 level as well, because just based upon the price action, we really do want to be keeping this from becoming a lower high, kind of lower low kind of situation on these smaller time frames. But right now, just neutrally oriented, can't really have a very serious call at the moment. But these are the key levels that you'll look for on the 4 hour. Now let's go ahead and jump over to the daily, because the daily of course, is going to close in, approximately 4.5, maybe 5 hours there, okay? And so for the daily, we do have to get above 28,000. Let's just call it 100, 28,100, and we should be sitting pretty for that volatility bias to the upside. Again, everything is pointed so neutrally, it's very hard to make a call right now. Anyway, I'm not really in the business of making calls, but you can see that we are just getting this kind of, crisscrossy kind of overlap on the EMAs. It's just not making it very easy to see what could happen. We could just as easily put a squeeze in to the downside, even come back to the bottom of this formation or break down from it, as we could have a little bit of a pop up. Right now on the daily, I would just my gut instinct would tell me that we're more likely to test the top of this, wedge than break down immediately, but it's just too close to call. And really, I do need to capture that volatility pivot at 28,100. Above there, I can, clearly have a bias to the upside. But we are holding our momentum here at 27,960. So above 27,960, I can't really be biased to the downside. We would have to breach that level for me to suggest that there is the possibility of a squeeze in any serious, manner. And then we will have a neutral point of control at 27,000. Should we break down from here, that could be one of our first bounce points, if not the 21 EMA, somewhere around 27,500. So that's the daily chart for you. Bears don't gain control of the day until we break 25,000, and that's pretty far away right now. Of course, if we want to have bullish continuation, we do need to get above 28,000. Let's just call it 500 for that continuation, for that bullish control to the upside, which essentially is flipping this wedge here. So there you go for the daily. Let's jump over to the 3-day because the 3-day is closing as well. And a lot of people do like to look at the 3-day for these crypto charts, and they just behave very well on the 3-day. It's a nice sweet spot between the macro and the mid time frames. And so, again, like it's worth paying attention to the 3-day, especially for a lot of these altcoins. They do operate on the 3-day chart. Now, as you can see, we are more or less just swimming around in our momentum pool right now on the 3-day. So nothing very definitive here. We do need to get above that 28,055 in order to hold our momentum to the upside. And for general continuation on the MACD, that's above 28,100, and let's just call it 30 there. We are biased towards the upside, however, because we do have the 3-day volatility pivot at 27,650. So what I can say is, unless we have just like a that squeeze that I was talking about on the 4-hour or the 1-day, unless we have that squeeze on the daily, then most likely we're going to hold the volatility pivot on the 3-day. And so the 3-day chart is going to keep its upward bias, even if we come all the way down to 27,600. And you can see that we do have the 300 EMA and the 200 EMA, as well as the 9 EMA and the 10 SMA, all in that same area of 27,300-ish, where bulls will maintain control of this chart. So we could come all the way down to 27,300, just do a test of this line, and we still could just, just a bounce and continue to go. And that could be what takes us to 31,500, maybe 33,000, right? These type of numbers there. And guys, the bears don't even gain control of this chart until 19,500-ish. So again, that's just a long way away. There is a ton of space to play with on the 3-day, and this is a very bullish looking chart. Now, we could go over the weekly, but I just don't want to provide too much detail here. Let's instead go over the 2-week, because the 2-week doesn't close that often, but it does close today in approximately 4.5 hours there. So you can see that we do have this indecision candle in this wedge that we've been forming on the 2-day, but we are well above our volatility pivot at 25,775, which means that we do have, again, a lot of space to just dip down here, and we are going to hold our momentum to the upside above 28,000. So you can see how critical that 28,000 line has been on many of these charts. Of course, we don't really lose any momentum until we cross that $20,000 space. Now, the good thing about the 2 week is we're not actually swimming around in the momentum pool right now. We are on top of it. We are on top of our hold momentum to the upside. And so, again, for the 3-day chart as well as the 2 week chart, this thing is bullishly oriented, and we could easily see a pop up to 33,000 where we do have this kind of 55 simple moving average kind of starkly headed down, like nose diving on us somewhere around 33,000 according to the 2 week analysis here. If we just pop over briefly to the weekly chart, we can also see that we have the 89 a simple moving average around 33,000. So again, a couple different charts suggesting that 33,000 would be the hard limit should we put in a pop. And again, I'm not going to overanalyze the weekly. I think I just want to have something a little bit special here for this channel, which is the 2 week, the 3-day, and then give you guys a little bit of a heads up on that 4 hour, which you can rewind this episode and check out if you'd like. Guys, let's just take a look briefly at what's going on with the Bollinger Bands and the Keltner channels there. I do just want to kind of add this as a little segment to these analyses. And you can see that, let's just go all the way down to the 4 hour again. Inside of this wedge, again, you can see that we are just playing around with the middle of the Keltner channels and the Bollinger Bands. Now, typically speaking, you do end up getting just shot in one direction once the Bollinger Band tightens within the Keltner channels. That's currently happening in these clouds, and so we are looking for a move to come up pretty soon, okay? It would be strange to just get this extended, but sometimes these wedges do get extended, assuming there's like news that the market's waiting for, maybe that CPI data on Wednesday. It could stretch out just a little bit longer as the kind of indecision in the market goes. But in general, the current look that we have on the Keltner channels and the Bollinger Bands themselves would suggest a big move should be coming up. And we can see this on the BBWP over here, where we're nearly against the floor on the 4 hour. And currently on the RSI, we do have a drive of bullish divergence building up, not yet confirmed, but building up. And as long as we are above that volatility pivot that I mentioned, then we should have some type of a bias to the upside. And our, Stoke is suggesting that that may be the case. And the Stoke also has its volatility against the floor. So again, guys, I'm looking at the 4 hour because we are expecting a move to get out of this wedge, this indecision wedge eventually. And I think it's going to come up pretty soon. Now, if we look at the daily, we have a lot of the same things going on, except I don't see that bullish drive over here. Let's see if we can find any more divergences. Of course, we have been building up these bearish divergences, just as we've been pushing up, we've been building up bearish divergences. But usually that just can indicate that a pullback may be necessary, which is pretty healthy. I don't see anything particularly draconian here, so the daily doesn't give me any other clue, except that we're also very low, and it looks like we may have one more, drive just sideways. Maybe a day or two, a couple days, maybe that brings us into that CPI data of sideways, and then we're going to be low enough to potentially start expanding either up or down. So again, the daily is also suggesting that a big move is coming up, and currently we are bullishly postured, or it's a little bit crisscross here, but we are bullishly postured on the daily as well. So at our current price as of this recording, but it is very much on the fine line. We are above the Bollinger Band average. We are above the Keltner channel average. So again, just a little bit of a hint that we may squeeze to the upside, but just not yet confirmed. Let's go ahead and go over to that 3-day, which will be closing. And we can see that if we do close in this posture, now this is the risk on the higher time frames is that we are well above the Bollinger Band average, we are well above the Keltner channel average. So even if we do have some type of a pullback and then a pump up, it's most likely that we're going to come back and tag this middle at some point. Okay, it's just the behavior. So we might get some type of a liquidity grab before we pump up, maybe to 33,000. And then, as these lines come up, maybe we have some type of a pullback like this. But maybe it's not as bad as people think. Maybe we don't get to that 25,000. Maybe it's just, in somewhere in this neighborhood, just like this was somewhere in this neighborhood, right? It's like, was it extra scary because USDC? Okay, but anyway, we basically tagged the Keltner channels and the Bollinger Bands average there. And so maybe this is something that we end up doing. And if we go over to the 3-day indications, one thing that we do have to pay attention to is that we do have the potential for a little bit of a turnaround. Currently, we're upward postured on the jewel, but this thing could decide to come down after this extreme overheating up here. Now, this could also just indicate sideways, so I don't want to get too excited about that. But in terms of our stoke, we are fairly overheated. Now we can hang out here in this kind of like a bullish zone, this kind of oversold zone for quite a while. And so I don't want to call that it could come down. It is bullishly postured at the moment, so just I can't really say anything about that. And being in the bullish control zone on the RSI, again, there's just nothing really to say about that, except that you can see that um, you know, these type of toppy formations tend to spill over, and we are getting a little bit of a toppiness here. Yeah, we could have another drive up, but you know, just we might be pressing our luck on this, and maybe we do need just a healthy check back, to the mean sooner or later. Guys, let's jump over to the weekly, just take a glimpse at the weekly, and you can see the same thing on the weekly here. Now, you can see that we check back quite often on the weekly to these means over here, and we are quite above it. So, again, having a pullback, grabbing some of this free liquidity on this weekly could be the fuel that ends up sending us higher. So if we do end up squeezing to the downside, I don't think that that's necessarily a bearish indication. I think as long as we catch ourselves, somewhere around 23,000, at the latest, then I think we've basically just reloaded the gas tank to go up, guys. So that's my personal opinion there. And then on the 2-week, we can probably see something very similar. Yeah, on the 2-week, we actually have some pretty good support there around 25,000. But it does suggest that, yeah, we could come all the way down to, 22,000, and we'd still be within a range that could still be squeezing up there. And I do believe that we're operating on the 2-week, so I think this is a pretty good indication of the extreme that we could potentially find ourselves in. Should we break underneath those levels, like 22,000, then I would get pretty worried. And of course, we probably want to maintain a bullish orientation, so somewhere around 23,000, not losing the middle of the difference here. That would be the most secure and ideal situation to have. We are getting a little bit of a squeeze here that does suggest could continue to the upside. And if we go on to the 2-week, of course, we do just have expansion mode on the BBWP, so that does suggest that it's just going to continue to expand to the upside. And we also have that bullish posture on the Stokes, which is likely to continue. Yes, we are getting a little bit of toppiness. You can see how this happens over here. If we take a look at some of the, I actually have a couple different indicators on top of each other, just so that I can see how they interact. And I can see that we are starting to get into that point where we're going to cross over here. And so we are building up a toppiness on this Stokes, even though it is, performing quite well. Let's go ahead and take a look at our RSI. We are crossing the midpoint on the RSI on this 2-week chart. So if we did come back and just retest the midpoint and then went for it, then again, that would be no big deal. Okay, guys, like it would just be, again, reloading the gas tank, letting this white EMA catch up with our RSI so that we can continue to push up, sort of like this little dip right here. See, we broke down from like this bearish zone. We pushed up across the midpoint, kind of spiked, and then we came back down to the EMA, right? Like push up from this bearish area, cross the mid zone, and then if we just came back and let this white EMA catch up, and then we use it as a launch pad to really just continue to go, right? And so we could potentially be doing that. Again, I don't see any negative divergences here or anything on the higher time frames. The higher time frames look really good. Guys, I hope you enjoyed that fuller analysis of the Bitcoin chart. Of course, most altcoins will be following what Bitcoin is doing since Bitcoin dominance is quite high right now. And one good thing is that we do have this drive of bearish divergence on the higher time frames on the Bitcoin dominance chart, which does suggest that we could have an alt season coming up. Let's take a look at the weekly. That was the 2-week, and yeah, we also have it on the weekly. Let's take a look at the 3-day. The 3-day. I mean, we have a couple drives on the 3-day there. Let's take a look at the RSI. Nothing really special on the RSI. The daily. This I usually consider this a rather bullish formation, but you never know. This thing could continue to break down, but that does look like Bitcoin dominance may have a little bit more into it, and it does have room to expand. Let's just take a look at the 4-hour here, and the 4-hour is also looking okay. So let's just go back to the daily so that we can take a look at the current formation of Bitcoin dominance. Should we end up, breaking back into this kind of wedge here convincingly, you can see my green line, right? Then I would suggest that we do have the possibility to continue to drive up, and that could just push Bitcoin up while altcoins just take a back seat to Bitcoin. If, however, we are rejected on this retest of the breakdown of this pink wedge here, then we could come back down to the bottom of this kind of a green rectangle that I have there, which if breaking down from there, which that would be good for alts, and then if we break down further from there, maybe grab this liquidity around 46%, we could enter a little bit of an altcoin season, maybe not the biggest one, who knows how long we would actually have for it, but should it just continue to drive down, then your altcoins could perform extremely well. And so currently we are watching the Bitcoin dominance chart along with all of these other indicators here, but it does look like Bitcoin has caught itself in this little bit of a range, and so just had a nice drive up here, and so the trust really is still with Bitcoin primarily in this market, and so Bitcoin's going to be getting all of the dollars. That's why your altcoins are going to be kind of underperforming largely across the board, even if there are a couple that are just spilling over. Now you can't see that this price action has recaptured the Bollinger Band average, and so should this thing continue to squeeze, and I do see a squeeze forming on it, then it would suggest to the upside, at least here on the daily. Guys, that was your alpha for the day. Stay safe and happy trading.